Hello everyone, welcome to today's session. So today we'll have a look at why choose an associate lease over a novated lease. Yeah, if you never heard about associate lease before, maybe it's better that you know what it is and you know how to utilize it to help you to save tax. All right, let's have a look. Before we go to the main content of the video, quick declaration: the information provided is for general guidance only and should not be considered as personalized tax advice. We recommend consulting a qualified tax advisor or planner before implementing any tax planning strategies. All right, let's have a look. So what is an associate lease? So it's actually a lease between a business and an employee or their associate. Okay, the vehicle is owned by the individual and leased to the employer. The vehicle is used by the business for income generating purposes. So I guess in a sense, it's very similar to novated lease. So a novated lease is a straight-way lease arrangement. So employer, employee, and a novated lease company. Yeah, third-party leasing company. But associate lease is actually basically removing or replacing the novated lease company by an associate. So by an employee's spouse. Okay, so it's still straight-way, but basically we're replacing a novated lease company by a spouse. Okay, so how does that work? Okay, so number one, associate. So the spouse with low income acquires the car, and associate lease, and then associate leases the car to employer. Okay, then employer provide car for benefit to employee with high marginal tax rates. So generally, the employee could be someone earning more than 200K, maybe a senior manager or executive, yeah, of a company. All right. Okay, so why do we use this strategy? Okay, business can claim lease payments as deductible expense. Okay, and then associate receives lease income and may offset it with related deductions. So basically, including depreciation or any other car-related cost. Okay, so also the associate can retain asset ownership privately, adding asset protection. All right. Okay, so key benefits, GST savings on purchase price. So this is, of course, very similar to novated lease. On the purchase cost provided if the employer is also GST registered. And then, of course, when you purchase a car, it's also GST free. So the GST will be saved right away. Okay, reduced finance costs. So when you're using a novated lease company, they actually factor in the financing cost, yeah, for the loan, for the car loan, and it could be quite high. Okay, but with a private arrangement like this, with an associate lease, you actually could potentially use your own funding, and you don't have to pay the high financing costs. Okay, and then lease payments are deductible for the business. Okay, and then associate can offset lease income with depreciation, interest, and rent costs. Okay, so with the interest, potentially the associate can create a split loan, for example, on the home mortgage. Yeah, that's could be a separate topic, but yeah, so you can potentially organize a split loan from a private loan, such as a loan attached to a main residence, and then you can actually start claiming the interest deduction, which could be much lower than the interest cost from a novated lease company. All right. And then of course the associate can claim the depreciation as the rent costs. Okay, so basically this arrangement is effectively redistribute income from a high tax individual to a lower tax associate. So if for example, the husband is paying 47%, okay, earning more than 200K, the wife might be earning nothing, okay, nil. So the wife will basically be receiving a lease income from the company, from the employer of the husband, okay, then claim all the deductions. So the ending result could be a profit, okay, attached to the wife, which could be no tax attached. if the wife doesn't earn any other taxable income, and then the profit earning or owning the car by leasing it out could be below the tax-free threshold. All right. Or even if the wife earns some other income, okay, if it's below 45K, then the marginal tax rate is basically effectively only 18%, including Medicare levy. All right. So then that's still much lower than the 47%. And then, of course, on the salary packaging from the husband side, the tax saved is actually 47%. So that's effectively redistribute income from a high tax husband, okay, to a low tax to the wife, okay, to the spouse. All right, so that's the key benefits. Okay, that's everything I wanted to mention. Of course, it's quite a complicated structure. Yeah, so if you do want to implement that structure, you do need to talk to us to understand how to implement it. Of course, it's important that your employer does provide that choice for salary packaging for you. Okay, if in case they don't offer that flexibility, then basically you can't utilize this strategy. All right, here's a brief introduction about myself and also our contact details here. If you have any questions, feel free to give us a call, drop us a message. Thank you very much. We'll see you in our next YouTube video.